Hello, just waiting for the time to start here, getting the room set up, etc. Share. Share screen. Presentation. Library presentation. Window. Share. All right. Hello, can you hear me? Mic check. Mic check 1 2. Hello. Can you hear me out there? If you can hear me, maybe type something in the chat or don't, or say if you can't hear me, I guess. Let me know if you can hear me. Oh, at least I can see me chewing. All right, we've got like 6 more minutes here before we start, but I'm happy this started, so I'm going to mute for a minute, and we'll be waiting. All right, I'm gonna give it like 2 more minutes and then I'll start. All right, we're gonna get started here. Thanks everybody for calling in. So I've got my Bitcoin presentation today. Just make a note or anything if you can or can't hear me. So what I'm going to talk about, I'm going to do a lot of background about what problem Bitcoin solves, because if you don't understand the problem that it's solving, then Bitcoin itself is not going to make a lot of sense. But I think once you understand the problem, then Bitcoin is the solution. Seems pretty intuitive. So, and then I'll talk about maybe how much Bitcoin, how do you buy Bitcoin, how much of it should you buy, etc. But after my last talk, I kind of learned that I wanted to put this concept of big ideas up front. So a couple of the big ideas, right, are just buy $100 or one share of a Bitcoin ETF, and that will kind of incentivize you to start learning about it. So, people like to sit on the sidelines and just think, well, maybe I'll buy some when the market dips or something, but inevitably you don't end up buying then. So I would say, just buy one share of the ETF. FBTC is the ticker symbol for the Fidelity Bitcoin ETF. So just buy one share of it, and then you'll be incentivized to learn more. Kind of the maximum amount I think people really need to buy is like $5,000 to $10,000 in Bitcoin. You don't need, $100,000 or $1 million in Bitcoin. I think Bitcoin is going to $13 billion a coin, and I'll kind of explain why that is. But what that means is, right, if you buy $5,000 today, you'll end up with $650,000 at this Bitcoin, is equal to 13 million points. So because of that, right, I think, the risk to reward ratio is high, and so you don't need to invest much. Just want to highlight for people that you do not have to buy a whole coin. Most people won't buy a coin. Owning a partial Bitcoin is okay. So there's 60 million millionaires, US dollar millionaires in the world, and there's 21 million Bitcoin. So statistically, even every millionaire cannot own a Bitcoin, and every person cannot own a Bitcoin, and that's okay. And then Bitcoin is a long-term investment. If you don't plan to hold it for at least 4 years, just don't even buy it. I think it's worth holding and buying for all these reasons I'll explain. So, if you buy some and it goes down, consider buying more. Okay, so some background here about what is money. So money is used to store value over time. Money is an IOU system that tracks economic value or labor that you've created. And just want to highlight for people that money is not backed by gold. So all the gold was taken by the government in 1933 by Executive Order 6102. And so, the dollar is not backed by gold anymore, just for anybody who had that misconception. I don't know if I can move my... Nope, can't move my face. Want to go backwards. I'm going to try to go backwards in the chat here. Gosh. Slide 4. Okay, yep. So money's not backed by gold. So the big problem with dollars or fiat money, right, is inflation. So over time, fiat currencies lose value due to inflation. Means your purchasing power decreases over time. This is due to the government running I said $1 trillion deficit, but it's actually a $2 trillion deficit this year and going forward. If you looked in 1964, the last year that quarters were made out of physical silver, this actually says it would be 5 quarters would be $21 today. It's actually doubled because this was from 2003. So today this would be like $42. And so, like I said, that was the minimum wage in 1964. So just kind of more evidence that the money is not the problem. It's that the money has no backing. Inflation's happened and been created by every government in the world. So you see the Romans. What they did was steadily decrease the amount of silver in their coins over time. So, early in their career, they had a lot of silver in their coins. They steadily would melt coins down, issue new coins, and debase their currency also. So what causes inflation? Right, again, it's government money printing. So the government budget is made up of kind of mandatory spending, discretionary, and then the interest. And then here you can see that the government deficit, I think this is last year, but was $1.83 trillion. So, your taxes that the government pulled in was almost $5 trillion, but the expenses that they've spent is $6.75 trillion. So, all that money, all that made up money is chasing things, and you're competing with the government printing money to buy things. So if the government has an unlimited checkbook and you have a limited checkbook, you're going to not win. The government can always pay more than you, and that causes inflation. As you can see, the total federal deficit has been going up in dollars over time. We had the great financial crisis, obviously, like in 2008, which had really high deficits, and then they were decreased a little bit, but they've been steadily increasing since then. Spike in COVID, but then continually increasing. And an important thing here is to measure the deficit against GDP. And so in this graph, negative is bad. So the more negative it is, that means that we're spending more of the deficit as a percent of GDP. And you can see this is kind of just like a downward slope for the last 20 years. This was World War II back here, where we had a big deficit, obviously. And then again, so all those previous ones were the deficit that was yearly deficit. So the debt then is an accumulation of yearly deficits. And so you can see, back in the 80s, the total debt was about 30% of GDP, GDP being gross domestic product. And so that's like how much goods the United States makes in a year. And so, back in the 80s, the fix to kind of all this was they increased the interest rate, right, to about 20%. And that made people, stop spending money and start saving money. But what would happen if we increase the interest rate today to 20% is that just the interest on the yearly debt that I showed would be more than the total budget. So the point here is that, interest rates are going to have to stay low because the government can't afford to pay high interest rates. And you've seen that. Trump's been pushing to lower interest rates. They've started lowering them a little bit. But like I said, eventually, this deficit is going to get so large, or this debt is going to get so large that we just can't afford to pay, these high interest rates. So I have a little saying here, right? The truth heard one time sounds stranger than a lie heard 1,000 times. And so the truth that maybe you haven't heard before is that inflation is caused by the government printing money, and there are only so many goods that are possible to be produced by the limited amount of resources in the economy. And an infinite amount of dollars cannot create more goods, and more money only causes the price of existing goods to increase, as there is more money chasing the same amount of goods. So historically, inflation has been worse in other parts of the world. Argentina's historically, had 100% inflation for over 15 years. Venezuela, Germany, post-World War II, Sri Lanka recently had a currency crash. So just because it hasn't happened here yet doesn't mean it can. Just a few years ago, we had 10% inflation. And like you saw with that increasing debt, that just puts us at more risk for inflation. Okay, so Bitcoin fixes this. And I guess really what I should say is Bitcoin doesn't fix the dollar problem, but Bitcoin is a parallel system that does not have inflation. And so, right, like I said, the continually increasing number of dollars leads to inflation and a loss of store of value. So the Bitcoin system has a fixed supply of 21 million Bitcoin, which means that they are scarce and prevents inflation. So another important thing, right? Each Bitcoin is divisible into 100 million Satoshis, allowing for precise transactions. So today, $1 is about 700 Satoshis. And when Bitcoin is $1 million, 1 cent will be 1 Satoshi. So how do Bitcoin transactions actually work in the system? So, a user submits a transaction to the Bitcoin network called the mempool. The mempool has a set of potential transactions that could be completed. And then the miners, in the meantime, are solving a complex equation. Once one miner in the world solves that equation, that miner gets to pick how many transactions out of the mempool go into a block. So each block can only fit about 1,500 to 2,500 transactions. And this happens about every 10 minutes. Oh. Were you looking for me or? Sure. Looking for the Bitcoin presentation or are you?
Oh, pardon?
Are you looking for a Bitcoin presentation or what are you?
I could be.
Oh, yeah.
Could be. Looks like I'm.
Oh, yeah. I got a live stream going too. So, do you want to learn about Bitcoin? Have a seat. Okay, so here, I guess I'm kind of partway through, but I'll just keep going from here. And if you got any questions, let me know. So here I'm talking about Bitcoin versus just kind of normal cryptocurrencies, right? So the big difference between those is Bitcoin. Bitcoin solves one problem, right? Store of value problem. Had a fair launch, no pre-mine, which means the coins were distributed fairly. A lot of alternative coins or meme coins that you hear about, somebody creates it, they kind of give themselves half, they give their friends 25%, and then they sell the rest to the public. So kind of the main point here, right, is that you want to basically focus on Bitcoin and not just cryptocurrencies. Okay, so kind of how do you buy Bitcoin? There's a couple different ways. Bitcoin ETFs, you can buy them on brokerages like Fidelity or Charles Schwab. They have a 0.25% expense ratio, which is relatively low. So this is the easiest way to buy Bitcoin. I kind of recommend it at the start of the presentation to, just buy like one share of the ETF, which might be like $50. And then, once you're invested in Bitcoin, you'll be more inclined to learn more about it. Another way that you could buy Bitcoin is on a app. So there are apps like Strike, River, and Cash App, which are all Bitcoin only apps. So I recommend those. There's other apps like Robinhood, PayPal, Coinbase. The problem with those is they offer other cryptocurrencies, and they also offer there are cryptocurrencies that have the name Bitcoin, but they also have some other stuff like Bitcoin Cash or Bitcoin Satoshi Vision. And so you can get confused, right, if you're trying to just make sure you get only Bitcoin if you use these other apps. So I would either use, Strike, River, Cash App, but really I would use like a Bitcoin ETF through like Fidelity or Charles Schwab first. And then, as you learn more, you could maybe use one of these other apps. So maybe some highlights here, right? They talk about investing in Bitcoin. But then different people like to point out, that Bitcoin doesn't have cash, that spits off. There's no dividends, no interest. And the thing to point out here, right, is that Bitcoin, it's not an investment. It's actually a ruler to determine how much value other things have. It's money, not equity. So, you don't actually invest in gold or dollars, right? You store value in those things. And so that's what Bitcoin is, right? It's not a business. It's a store of value. Again, it's savings technology. So, you should think about measuring your investments in Bitcoin, not the other way around. So, every year, kind of at the end of the year, a fun thing to do is if you take all your investments and divide them by the price of Bitcoin and see how many Bitcoin you have. Generally, you'll see that over time, you're probably actually losing value in Bitcoin because the Bitcoin price is going up. So this is kind of some interesting history, right? So you have the price of an iPhone in Bitcoin, right? And so was 162 Bitcoin in 2011. Now we're down to 0.014 Bitcoin. And then for houses, right, you can kind of see a house, in dollar terms, the house is going up in value, but in Bitcoin, the house is actually going down in value for now. So, if you'd bought some Bitcoin back here instead of a house, you could buy like 10 houses now. So kind of fully expect that to continue in the future. So that was some big stuff. This is kind of a fun graph from the St. Louis Federal Reserve. So they're measuring the price of eggs, and here they're measuring eggs in dollars, right? And so, we had a bunch of egg price inflation and egg prices going up to the moon. But, if you measured eggs in Bitcoin, they were actually pretty stable or even going down. That's just kind of a fun little graph that they had there with the Fed. Okay, so this is showing you kind of all the value in the world. And so it's kind of interesting, right, that the real estate is actually half of all the value in the world. Stocks are about 100 trillion. There's tons of bonds, tons of cash, a little bit of gold, and then some private collectibles and stuff. And then Bitcoin is down here. It's, a very small amount of the current total value in the world. But I think that Bitcoin could really kind of absorb a lot of those other values, right? So there's this idea called a monetary premium. So because, dollars and because dollars especially, I guess, are a bad store of value, right? Because you're losing money to inflation every day. People put money in all these other things, right? So people buy real estate. People buy stocks, people buy bonds, basically anything to get out of dollars, people buy. And so that kind of inflates the price of all those things. And so if you take kind of the amount of value that's stored in each of those assets, that's really this monetary premium. I think that is about a third of that total value. And so if you divide that 273 trillion by 21 million Bitcoin, it gives you about $13 million. So that's kind of what I think the fair value of Bitcoin should be. Obviously, it's not that now. There's kind of two types of buyers for Bitcoin, right? So there's speculators. So, somebody who buys it today, it goes up 20%, and then they sell it, this is kind of driven by the media. Then there's more people who kind of have this understanding of how Bitcoin kind of fixes the system. And so these people are just kind of steadily buying, small amounts of Bitcoin with every paycheck, more as like a savings tool. So these people kind of provide a steady floor, but these top people are the people who are kind of making the price, go up and down 20 or 30% at a time. So because, right, I showed Bitcoin is a small percent of the total world assets, right, it still has a lot of this volatility. But as it gains adoption, right, that should dampen out. So this is kind of the 200-week moving average, right? So if you kind of take the average price of Bitcoin over the last 200 weeks is this red line, right? And so you can kind of see that line kind of continues up steadily, right? It takes out a lot of the volatility. And so, I would expect that 200-week average to keep moving up steadily. So right, Bitcoin, it's a long-term investment. I mentioned that there's 60 million millionaires in the world, and there's only 21 million Bitcoin, right? So that comes out to 0.33 Bitcoin per millionaire, which, today Bitcoin's about $100,000 a Bitcoin. So that would be $33,000 that each of those millionaires, if they bought that much Bitcoin, it'd all be gone. So obviously, that not as many people have bought that much Bitcoin because the price isn't that high. There's also a bunch of lost Bitcoin. So you've probably heard about, there's a famous guy, I think in the UK, who had a computer from like 20 or 10 years ago and lost it in the landfill. So there's actually, less than 0.33 Bitcoin per person. So maybe if you divide the 21 million Bitcoin by 8 billion people, right, that gives you a 0.00262 Bitcoin. So in today's price of $100,000 a Bitcoin, right, that's $262 to kind of secure your portion of all the Bitcoin. So I would kind of call this like the minimum number I would think people should kind of have. So looking forward, right, if you buy 0.1 Bitcoin, which is $10,000, and if my future estimate of Bitcoin is good at 13 million, that would give you $1.3 million. If that's too much, right, you could buy 0.5 Bitcoin, cost you $5,000 today, would be $650,000. So I think that's a pretty good like risk reward, right? You could go from 5,000 to 0, or you go from 5,000 to 650. Obviously, it's a high risk, high reward investment though, right? So you see you got really high returns. You got some really big negative years, right? Negative 58%, negative 73%. And even in some of these positive years, right, you get negative 20 and 30% within that year. So, right, that's why I said, don't buy more than you can afford to lose. But, I think it's worth learning about more. So there's a lot of states that have Bitcoin laws that they're looking at. There's 3 states that have actually passed Bitcoin laws. So New Hampshire, Texas, and Arizona. So those 3 states have. Hello. Oh, you here for the Bitcoin talk?
Yeah.
Okay, perfect. So there's 3 states that have passed Bitcoin laws, right? Arizona, New Hampshire, and Texas. Also, the country of El Salvador itself is buying 1 Bitcoin a day. They have been for 4 years. Bhutan, little country, is mining Bitcoin. Pakistan is mining and buying Bitcoin. I actually just saw today that the Czech Republic bought $1 million of Bitcoin. Didn't have time to update this. And then the city of Roswell, New Mexico actually has a little bit of Bitcoin. So that's kind of interesting. There's a whole list here of companies that are buying Bitcoin. I've got a link here if you want. You can give me your email. I can send you this and you can get to the link, or you can just Google companies buying Bitcoin. You can get a whole list. I think there's a couple hundred that are buying Bitcoin. And then, so this is something that, if the whole Bitcoin thing is kind of too volatile or kind of confusing, or just feels kind of risky, there's a tool here, and I think this is pretty interesting. So instead of buying Bitcoin, this STRC, so it's a stock, but it's a stock issued by the company called Strategy. That's the biggest Bitcoin holder. Oop, I got to plug in my computer before it dies. Made it. So the goal of this STRC is to maintain a price between $99 and $101. And so instead of having a bond, you could, so like bonds or CDs, right, are returning like 4 or 5%, more like 3 or 4% today. This returns like 10%. And the reason that they do this, right, is they expect Bitcoin to return 29% a year. So they can pay you 10% a year if they expect to get a 29% return. And like I said, the goal here, right, is that this maintains a kind of stable value. So it's supposed to be more for like an emergency fund or like a short-term store of value, right? So you're not going to get, this is not like investing in stocks, right, where the price is going to go to the moon. But it's kind of another interesting kind of Bitcoin adjacent tool that's available for people. And again, I wouldn't go putting all your money in this, but I'm putting a little bit of money in it and kind of just learning how this works. It's only been available for like 6 months. But I think that's a pretty interesting tool also. Okay, so kind of summing up here, right? Bitcoin, I would say, is a solution to a broken money system. Investing in Bitcoin can give you potentially high returns, but comes with significant risk. So like any investments, right, you should kind of start small and then kind of increase your exposure as you gain knowledge and understanding about Bitcoin. Chris, do you have any questions? Came in a little late, so I had some stuff at the start. Hello.
Hello. I guess my big question for starters, if you were talking to a beginner, what is Bitcoin? I know cryptocurrency, but what's the significance of Bitcoin?
Yeah, so let me, I'll just skip back to the start here since you guys came in a little late. And I'll just so let's see where I would go here. Actually, well, so I'm actually going to start way back at the front. So, the first question, right, is like, what is money, right? And so money is just a store of value over time, okay? And so, you go work, and then somebody gives you money, and that money represents your time, right? It's a store of your time. It's a store of your value through time. But the problem is, right, that, if you have $100 today, a year from now, right, you can buy less stuff with this $100, right, due to inflation. So the point of Bitcoin, so gold, right, you could have gold, right, is also a store of value over time, right? Generally, gold kind of goes up slowly over time. So there's multiple ways to store your value over time, right? And so Bitcoin is what I would say is it's a new way to store value over time. And so I use kind of like an IOU example, right? So I have a story about building a fence. Okay, so if I build you a fence, 100-foot fence, then I built the fence for you. You owe me one fence, right? And you could either pay me in dollars, you could pay me $100, or you could say, you owe me a fence. So a year from now, if I want you to build me a fence, and I say, hey, build me a fence, you could either just build the 100-foot fence and we're even, or I might actually charge you $110, right? Because now it's a year later, labor's worse, more expensive. So this is kind of the problem of storing value over time. So what Bitcoin is supposed to be is it's an IOU between people, but it's a system that we all agree, like you and me can have an IOU between ourselves, but it's hard for, me to spend my IOU with somebody else, between you. So it's just like a fair IOU system, which is all money is, right? Like all money is an IOU system, right? There's no intrinsic value to US dollars, right? So at the core of it, Bitcoin is just supposed to be a fair IOU system. And so then like the details of Bitcoin, right, is how it tracks who owes who in the IOU system, right? And so it's really just tracking who owns the IOUs, I guess is the really high level bit. I guess, do you want to know more of the technical details, or do you want to know more?
No.
It's really just it's a way to track IOUs and who owes who or you don't owe any individual person the IOUs, obviously, because it's a complex system of we all have done work for each other.
What's the origin of calling it cryptocurrency? Because I always found it kind of peculiar that the word crypto in Latin means something, something that a lot of people aren't familiar with.
So for me, right, the base is cryptography, right? So the Bitcoin miners, right, they're solving this cryptographic SHA-256 hashing function, right, to decide who gets to solve the next Bitcoin block. So that's where like the cryptography comes in, I guess. And the wallets, right, they have like this cryptography. They're encrypted. All right, so that's where the crypto bit is coming, is encryption. It's for cryptography, so keeping things safe.